È un'altra giornata difficile a Wall Street, siamo qui al New York Stock Exchange in compagnia del nostro ospite che è Greg Keating, che è Managing Director della James E. Coffee Security. Greg, welcome and thank you so much for being with Inside Exchange.
Thank you.
So, as I was saying, it's another very difficult day here at Wall Street. Today we are looking at a very important psychological level broken by the euro. We are under 130 for the first time in 11 months. Does that mean that we are entering in a new phase of the European crisis?
It may. I mean, the European crisis has obviously dominated the headlines, going for some time now. Not only did that key support level of the $1.30 or the 130 range for the euro break through, but you also see oil trading below $100, gold trading below its 200-day moving average, and just S&P, which used to the 50-day support of 1225, that's come through today. So we are seeing a new step here. Where will support be garnered? It has been a difficult week, down over 2% so far. So there are a lot of questions to be answered, and unfortunately that it doesn't seem to be answered so far right now.
And the Federal Reserve is not helping either. I mean, yesterday a little bit of disappointment from Ben Bernanke. No intention for now, for another round of QE3, but he still sees a lot of risks linked to the European crisis. That means that we can see a QE3 early next year.
Well, I'm not sure about the QE3, when it will be or if it will be. One thing that the Fed has remained consistent on is their view that growth has been moderate, and it will be for some time now, and that's what they've shown with their target interest rates for a long term, that 0 to 0.25%. What I think yesterday was a bit of a catalyst with lack of speak of this QE3, but I think on the other end, I think the economy in the U.S. is holding up. So therefore, we may not need that QE3. So you could also take a positive spin out of that.
Absolutely, that's what we need right now. And you were mentioning some technical levels before. Today is very critical. Tell us, the levels we should look at.
Well, obviously we've come through that 1225 level in the S&P, but I think the next level of support is probably that 1200 range. But I think that's going to be, on top of the technical levels, you have to keep an eye on the Europe news coming out of Europe. That's obviously dominated the headlines. There was some small amount of news coming out of the U.S., the export news and things like that, not able to dominate that kind of news coming out of Europe. So I think you really have to keep an eye on the news coming out of Europe, and that's really going to dominate the traders and the emotions of the market.
And the market is going to be very volatile this week in particular. We saw yesterday a lot of rumors dominated the market. Friday, big expiration day for December. So let's look ahead. From now until the end of the month. Of course, rumors. Europe is going to be very important, but are you confident? Can we see a Santa Claus rally?
Yeah, I think so. I mean, I think what you were saying about rumors before, unfortunately, the market treats rumors, very seriously. What we've seen in the past is very low volumes, which has exacerbated the volatility. I think Friday will be a key day to look at because you're going to see a lot of volume on Friday. So it'll be interesting to see what the market can do. I think, as I was mentioning earlier, it's tough to really see how the market's going to finish. I don't see volumes coming back at the end of the year. I think you have to keep an eye on retail sales. Obviously, if we can get that Santa Claus rally. But right now, I think with the lack of volatility, you're really getting exaggerated movements on rumors and any type of news, especially coming out of Europe.
Thank you very much, Greg Keating, for being with us.
Thank you.